So, really what we heard for quite a few years now from the oil and gas majors that were diversifying into renewables, the key reason that they couldn't allocate more capital was that they would be leaving value on the table, and this was not feasible. This was not what their shareholders would want. But as I said earlier, sort of the oil price collapse has changed things, and what has also changed things is this increasing pressure that we are seeing from the regulators, governments, etc., which is going to see implementation of carbon taxes, carbon pricing, as well as higher cost of capital, and both of these things will really further suppress returns from oil and gas projects. And this kind of environment has really created a very strong case for reallocation of capital from high risk and high carbon fossil fuel projects to low risk and low carbon projects that renewables are characterized with. This also kind of maybe answers or even opens a question of what oil and gas companies can bring to the table if they get into renewables, because a lot of people are really wondering still and asking whether oil and gas companies are the right companies to invest in renewables. Why not just let renewable companies develop renewables and oil and gas companies stick to the knitting, the option which you did not like? Clearly BP has tried to illustrate how they can deliver this, but I think as far as investors are concerned, they need to see the proof of it. So the proof will be in eating the pudding, and so execution of this strategy is yet to be seen.
Yeah, there have recently been several announcements with big major banks who are saying they don't invest anymore into pure oil and gas projects. So, but in this case, where will the capital come for oil and gas projects? Do you have any vision on that? Because
well, that's a very interesting one. I think the kind of mainstream capital is certainly under pressure, as I said. So, the mainstream capital is asking the corporates to do something, but if corporates don't want to do anything about it, or are not willing, or maybe they're not in jurisdictions that are likely to impose carbon prices and taxing, what their options are is to turn to private equity and private capital. So as long as they're profitable. So profitability, so cash flows will be key. As long as they can also kind of sustain their own operations, or kind of can find private capital and private equity to invest in them, then that's that they're going to find their way forward. We have other industries that are not considered very popular, not quite kind of moral money. So we have tobacco, we have weapons. People still invest in these companies. So capital will find its way into oil and gas as long as resilience, part of the strategy, is working well. However, it's not going to be without problems, because you need to think about kind of the talent that you can attract, what kind of, how many people want to work for companies that are not really sort of on the right side of kind of societal reforms, etc. So so it will have to be a balance. But for sure, if there are returns to be made, capital will find its way towards the returns.